Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
All right, everybody, welcome back. Do me a favor. I have a new setup here at home. Can you guys hear me okay? Let me know if you can hear me, if you can see me. How are we looking? Hopefully it's okay. Still getting used to a new desk. So I ordered a new desk and assembled it over the weekend. Can everybody hear me? Let me know. Okay, sounds good. Cool. Can see and hear you. Awesome. Yeah, so I got a new setup kind of going here at the home office. You can see here's a painted picture of my. Actually, it's done with pins. My sister drew this. It's cool. It's my cat's. I got a little chest here. Nothing in it right now, but and then I got a little bull and bear here. There's a little bit when I'm feeling extra bad. A little bit of whiskey back there that I never drank. Anyways, yeah, so I got the home setup kind of in the works, trying to figure that one out. Lighting and cameras and all that stuff, as long as I've been doing this stuff, have never been my forte. That's why I have, more talented people that help me with that stuff. So that I can stare at charts all day like a degenerate. But anyways, I hope everybody's doing well. Hope you're staying safe in this crazy, crazy time. I don't know that I love this camera angle, to be honest, and that is going to bother me. I think I need to put it over here, but my webcam doesn't go far enough. So let me just give me a second to play with this. Okay. We'll do that for now. And you can also see I've got my ancient sign here. This was the logo back when, back when I didn't have, it was just me and my garage, with a bunch of books and a Lambo. Back then, I'm just kidding. But back when it was just me, I just had this logo that my wife actually, she drew that. And so it's kind of cool that it ended up landing at I've kept it the whole time, but it ended up landing in my home office. So anyways, let's get into some charts. So gold's down 2% again today. This is probably the chart of the day. It's got to be. We've been talking about this level of support for a couple weeks now. And let me pull up my pen. So I bit the bullet. I went with got a new PC at home. I'm gifting my previous one to my brother-in-law. He's 12 or 13 years old and he's wanting a gaming computer so bad. So I'm just I bit the bullet, got a new PC at home and setting it all up. So if anything is off, I apologize. Anyways, chart of the day has got to be gold. We are breaking through a level of support that has been really strong for the bulls, right? Also, how are we feeling about gold? Are you guys feeling like this is a fake out? Do we have some bulls in the room? Or do you feel like we may actually have more downside? So question for the day, are you guys feeling bullish or bearish on gold at this time? Let me know. Just chat it or comment it in the chat. Check this out. Soda, 9 a.m. Tell me that you're a trader without telling me you're a trader. Any excuse to have caffeine? I usually drink coffee at this time, but I don't know. I'm just insane. Anyways, okay, so we got some bears out here. I mean, that's kind of, so I'm not, let me get into fundamentally, let me just kind of say it this way. I don't really have a strong bias. Like, so I know that that's not as exciting content wise, you know, for me to say like for weeks on end. Yeah, kind of neutral on gold, but that is the truth. But from a technical basis, I can kind of give you a bit of a bias. So like if I'm only technical focused right now, this looks like it is pretty close to a reversal. Now, you could draw, if you want to get into trend lines for a second, we could draw this thing a little bit differently and say maybe but even if you draw your trend lines in this way, right? If you draw trend lines and you look at this, by the way, I spoke to I had a podcast interview with the queen of trend lines herself, Tori Trades. She came to our office yesterday. It was pretty cool. We were all like, what? You want to come to our office? Sure. It was cool. We sat down, we did an interview. It was awesome. But that podcast, a lot of content, a lot of file sizes and, you know, stuff to go through, but we're going to get that put together. And I know a lot of people were really excited to hear we're doing a sit down interview. So it's going to be fun. Or it was fun, but the video upload will be really fun. So also, this is a crazy, like, you're going to make it so much longer on this planet, likely, than the rest of us. I've never had soda, alcohol, smoked, or had coffee. This person must drink a lot of tea. Tea and Gatorade. No, that's awesome. I mean, you probably should stay away from, I don't know about coffee. I don't know if coffee is bad. And I mean, I'm not a medical professional in any of that stuff, but soda, I can't imagine is good for you. Yeah. Alcohol has got to be bad for you, right? There's too many studies that show that. Anyways, here's the thing, right? So even if you're a bear, even if you're a bull, right? I think the bulls, if we close like this, and this is the determining factor here. The way we close today is really big, because if we close like this, let's say that the candle at the end of the day looks like this, guys, right? That's a different candle than if it closes like this, where it's just a big, you know, downward candle that closes decisively at the lows. Those are two different candles. First of all, we're sitting at a major level of support. Everyone's got that level of support on their screens, right? Got to be like anyone who's watching the daily chart on gold, which is a lot of people. Huge level of support around that 3,200 level. We failed at 3,200. We're now going lower. We're under support. You know, it depends how we close, but if we close like this, it's very probable, in my view, that we're headed down to test 3120. And it would not be out of the question that we actually see us go back to test 3,000, 2960. So I think if you're bullish on gold, and we close like this, I think we still could acknowledge, okay, well, even if I'm bullish, we may still be seeing some corrective moves that we have not had in a while. What is this? Is this a 61.8% retracement? Nope, it's even more. We're about to test the 61.8% retracement on gold. This is a big level psychologically. You also have huge support here. So I think if you're bullish, the next question mark becomes this 61.8 to 3120 level of support, right? That's kind of your big spot to watch if you are, you know, bullish on gold, because here's the thing. This price action is rough. You know, this trend line completely failed out. This trend line is still a ways away before getting tested. The Fibonacci retracement, so we're going very technical here. The Fibonacci retracement, 61.8, is still below price. So that's kind of where I'm at with this. I feel like if you're watching gold, this level of support was so critical for the bulls to hold if we were going to have kind of that short-term continuation of the melt up. In my view, we have kind of failed out here. And likely we may be doing one of these guys here. Down to, you know, this level here. The question then becomes, from there, how do we react? Because clearly you can see how we're reacting to this level. Let me zoom in a little bit. You can see how we're reacting to this level, right? We're reacting pretty poorly. Bears are taking control of this level. Of course, watch how it closes today, because this can be deceiving. If we snap back and we have like a long, if we have that candle today, that's a different candle. So watch that. But from a technical basis, we've so far, depending on how this candle closes, potentially are failing at this key level at 3,200. So that could lead to further downside in the short run. And if we see continuation, like more failure, that's something to be very, very cautious about. Guys, we've been doing questions on the stream here recently. Yesterday, I did not get to questions. We had CPI day. Maybe we could drop the link here. If anybody would like to ask a question for the stream, like Forex Matrix, Nick, are you streaming from home? I am. I've been working hard on the setup at home, trying to get something that's decently presentable at home. But if you guys would like to ask a question, there it is. Thank you to Chandler for dropping that. I'll answer some questions towards the end of the stream. We can go from there. So here's another one. Royal Trade says, I have a small positioning on GLD. Yeah, so I mean, like GLD is an ETF, right, that trades gold as if it's a stock. Well, GLD, like from a longer term perspective, if this kept rolling over, like if we really started to see, like let's put some moving averages on this. This is a weekly chart. Like this is where I think that you could possibly even start scaling in early and still do okay with gold over the long term. That's my personal opinion. But I think like the challenge for me with gold is I feel more inclined to trade it when it's moving like this. Like it's clearly moving in one direction, or at least it has for some time. That may be, as we speak, materially changing. We had some rejection on the GLD chart. This is just an ETF that tracks gold. And so we're seeing some reaction. We can see the gaps, right? Gapped higher, failed out after, the weekly move there, and then gapped lower, and then gapped lower again here. So something to think about. But I think that if we are looking at, gold on a 4-hour chart, you can see we're coming to, or GLD on a 4-hour chart, we're coming to some levels of support. I do think that for the gold enthusiasts in the room, I think you should also just practice keeping an eye on GLD. GLD is a massively traded instrument that a lot of traders in the United States use as a vehicle to trade gold. You can do options on it. You can do all sorts of stuff. I trade GLD when I trade gold. It's the same thing, but it does show gaps, which gaps can actually be very useful to see how markets react to gaps. Like here's an example of a gap. Some would call this, I think, like the warrior trading guy. I don't really know, like Ross, the warrior trader guy. I don't really know much about him, but I've heard him discuss the concept of like the gap and go, like gap, and it just takes off, does not fill the gap, right? We just rush off without it. Gaps can actually be interesting. Here's another gap and go. You can see that pattern is very interesting. Gap, go, then we came back and ultimately filled that gap. So gaps can actually be, sometimes people hate gaps. They can actually be quite useful to study the sessions, right? Gaps have an inherent like kind of, because what are gaps? Well, gaps are when the session closes for like the New York Stock Exchange and then opens up the next day, and then you get the gap, right? As opposed to like the foreign exchange market or the futures market, which is like 24 hours, 5 days a week. Gaps can actually be kind of an interesting thing to think about. Anyways, like I said, gold to me on the daily chart looks like we are now coming down to test yet again. Another technical read is the 50-day moving average, right? So the 50-day moving average looks like also lines up with everything we just discussed. Trend lines, support level here, the 61.8% retracement. We're talking about a lot of reasons here for this to kind of come down and test this area. Now, are bulls going to hold it there? We'll see. I personally have a neutral reading on gold. I know I've spoken a lot about gold here. We will get to other charts. But that's kind of the synopsis for me right now on it. Gaps are predetermined take profit levels for me. I like that. Because so often, right? So often you get a gap to close just for it to shoot back in the other direction. Like let's say, for example, I don't know if we'll be able to, I've seen it on SPY so many times. But basically the idea is you have a gap that gets left open, market goes back and fills it, and it finds support or resistance there, right? So here's an example. You ready? This is kind of crazy. So this isn't a perfect example, but notice how on SPY, which is an S&P 500 ETF, let's just do this really quick. So if I go here and I say, here is a gap that was left open, you can see the market went up and then pulled back, kind of came back into that region and found support there, right? So for example, if the S&P 500 has a down couple weeks, like let's say we come down, you could potentially watch for support at this level, right? Where the gap kind of opened up, where that jump was. Gaps are a pretty fascinating thing to study. Because oftentimes what the market is wanting to do is just go test that area that we sort of gapped through. So it tests it. And then if the bulls were really, truly strong, we see this. And if they weren't, sometimes you see the gap fail. So gaps are something to actually, in my opinion, learn about, not to be like, oh, I just don't like gaps, right? Well, we left a gap even on the futures market with the S&P because we gapped up this week with the trade deals and everything that's gone on. Taking a look at the S&P 500, I've been doing a lot of coverage on indices and gold, by the way, in our Telegram channel. If I could ask you guys really quick to take a second to make sure, if you are not in our Telegram channel, some cool changes are coming your way. I can't even show you because on this new computer, I haven't downloaded Telegram, or have I? Have I? I can't remember. I have, I think. Wait, have I? No, not yet. I'll set that up soon. Like I said, I have a new PC at home that I'm still in the process of setting up, but explore it for yourself. I will be doing many charts in there for the foreseeable future. We have some really good content that we share in there, kind of updates on charts that we're watching, gold, silver, S&P, NASDAQ, currency pairs. We do all sorts of stuff. Which PC did you get? It is a CyberPower PC. I think it has an i7 processor or i5, one of those. But it's more than enough for what I need it. I don't really do a lot of gaming on it. So, it is way more than I need, but that's kind of what I prefer. I'd rather have more PC than I need because streaming is heavy, right? Like streaming and TradingView and Edgefinder all at the same time can be kind of a tax on a computer. And so I used to have a computer at the office that was way not good enough for what we did. And it was really frustrating. It would like melt into the floor during live streams. So yeah. Anyways, let's take a look at our list here. Top setups currently on the Edgefinder. Top setups, of course, is considering some of our key economic data, sentiment, technical and economic reads. So yesterday with inflation, what you'll notice is that Edgefinder is giving some really generous inflation scoring for the S&P 500, the NASDAQ, the Dow Jones, and the Russell. So do you notice this? So Indices got a mega boost in score on the Edgefinder from CPI. Let me ask you, does that make sense? Does that make sense? Just logically, you can answer if you'd like in the chat, or just rhetorically think about this. Yesterday, we had inflation data that was incredibly promising because people have been really worried about inflation dramatically rising. Well, yesterday, we had the 3 in a row, which on this channel, we talk about this. If you're a regular, you know this well. We talk often about 3 in a row being an important trend rather than just a fluke. Sometimes you get a weather storm, or you get something that can just skew the data a little bit in a singular month. But when we talk about inflation data, right, coming in 3 times in a row, lower, aka better than expected, that is a trend. So we've got a trend here forming for inflation data being better or lower than expected. In fact, I don't know if you guys picked up on this. This is a 5-year low for inflation. Now, is this Donald Trump is doing an incredible job and he's saving the day? I mean, Depends who you ask. Some people might say yes, some people might say no. I would say that oil prices being down have really contributed, but that Jerome Powell and team have done a pretty good job, in my opinion, considering a challenging environment. However, let me not go too easy on them. If they stick to the inflation problem from here and still push back on rate cuts, then my opinion might change a little bit. Here's the progress we've been wanting to see. We're seeing a trend down now. 1 or 2 months down in inflation, that's not necessarily a trend, but you get 3 in a row, and it looks to me like we've got some good, steady inflation data improvement. The labor market is holding up okay. I do think now it is appropriate to cut interest rates. Okay, so does that mean a rapid rate cut? No, but I think we're sufficiently restrictive. They themselves have said they feel restrictive. And so now that we have inflation data getting closer, maybe we can dial it down a little bit on the rates, right? And so I think that is a middle ground take. I think that, to be honest, I think that Powell will acknowledge that. If he sticks too much to the inflation and employment data, I mean, we had some really good data here, but also we had signs that it looks like the probabilities of a mega horrible war of attrition, trade war, is less likely now. So to me, that says 2 words: rate cuts. My opinion, we should be cutting rates pretty soon. Again, where that goes, where people get really, and you guys have all probably seen it, there's a lot of people who are very politically charged, blaming everything on Trump, or giving all the praise to Trump, or blaming everything on Powell, giving everything to Powell. What I say frequently on my channel that I try and do the best I can with is to keep an eye on just the data. Let's look at the data. Let's study this, right? Because this will help to guide us, and not to get lost in the headlines and the hype and the fear and the all the craziness that's out there. So inflation data is coming down. Jobs data is holding up okay. Rates are pretty high relative to recent times, at least, and maybe have room to come down. So does that make me bullish on the indices? Yes. That is why when we go to the top setups page, everything that I just discussed was automatically derived in our scoring algorithm. We got a +3 for the Dow. We got a +3 in inflation for the NASDAQ. +3 score S&P, and +3 for the Russell. Now, if you don't know what that means, if you're like, I don't know what your scoring mechanism here is, if you're new to the stream, all this is doing is we're looking at economic data, which we know impacts the markets. We know that's really important to the markets. But more importantly, we're saying, okay, there's a lot of economic data to keep up with. So let's build a system that automatically keeps an eye on services PMIs, GDP numbers, inflation data like CPI, employment change. It's looking at these things and essentially tracking it all and generating bullish and bearish biases. So when I look at the NASDAQ, the Dow Jones, the S&P, and the Russell, this very bullish bias is appropriate to me. Now, very bullish, let me outline what I mean by that, because sometimes people hear me say, oh, I'm very bullish on these things, and they hear, so you're like every day, full port, buying calls, 0 DTE calls, and you're betting that this market's just going to go straight up. And the answer is, for that, like I am bullish. I think that the path of least resistance is higher. But first of all, I don't know that it's going to go higher. There's no guarantees that it goes higher, first of all. But second of all, if it's going to move higher, if I'm going to be involved in that, I do at least want to wait for corrective pullbacks on the 4-hour and the daily chart. We've had a really nice push here. This trajectory has been really strong, but I do think it's very it would be very healthy for this thing, whether you're looking at the 4-hour or the daily chart, to get some pullbacks. Like this has pretty much been a one directional move. And what could happen here is you could get a week or two where people kind of, well, what's going to happen with the trade deal with China? We don't know about that. Or maybe if something happens that wobbles the market a little bit, that to me would ultimately be an opportunity to buy the pullback. I have a lot of stocks that I own that have done really well in this period of time. But I would like to get long S&P, like to get long NASDAQ, like to get long Dow. Yesterday, the Dow Jones was held down heavily by a singular stock. Anybody know which stock it was? It was UNH. UNH got absolutely crushed yesterday. This is a huge United Healthcare group. Massive, massive drop for this stock. And it's a big weight to the Dow. So yesterday, even though everything was up, the Dow Jones was actually negative due to that. So just context, the stocks that are in these things do make a big substantial impact. You know, when you have Meta and Amazon doing quite well, these also play a big role in those indices, right, that have them in them. And a quick Google search and you can find out which one is which. Also, I asked you guys a little bit ago to ask some questions if you had some for the stream. If you do have some questions, we'll drop the link again here in the chat. And I'll pull up some now just to see if we have any that look good. Also, while we pull up those questions and last second people ask their questions here for today, I've got 3 questions. So if you ask your question, it will very likely get answered here. I have a small short position on the Australian dollar against the New Zealand dollar. It is in the negative by a little bit. I shorted around here. So I'm in a small drawdown on this one. I am also long CAD Swiss and dealing with the drawdown on this one still, but it has much improved from its depths. I'm between the 2 positions. I think around here I was break even. I went long CAD Swiss once and then a second, well, I think it was like more up here and then down here. So I've got like a break even trade or so. It's a dollar cost averaging approach. And you can see it popped big on trade kind of news going well. I think that trend could actually, from a longer term, this is not like a short term necessarily like momentum trade or anything like that. Longer term, I think that the CAD Swiss actually has some upside in the bigger picture related to the trade stuff. Bitcoin's down a little bit today, pretty much flat. Gold, like I said, the big mover today, breaking through that key level of support. SP500 kind of just flat on the day here today, following that big up day on CPI. Yields slightly higher here today. I think yields are in a good spot, not too high, not too low. Too low would suggest economic recession. Too high would suggest inflation worries. So where we're at, I think, is okay. Euro dollar. Euro dollar, I'm very mixed on the dollar here recently. Euro dollar is getting a bullish reading here, but this is one that I'm a little cautious about. And if we take a look at the economic only score for a second, yeah, we get a +4. So economic score only basically considers only growth, inflation, and labor statistics for generating a bullish or bearish reading. We don't have bias on this one. We just have a number. At some point, maybe we'll add a bias to this. But when we take a look at our major currency pairs, so this is going to be all your US dollar crosses, Kiwi dollar has the strongest outperformance relative to the dollar, at least in recent times. The Australian dollar does not so much. Dollar Swiss. So these would be some of your, if you were bullish the dollar, maybe some ones to watch. And then if you were bearish the dollar, things like, actually dollar's very strong against the yen here recently, which is interesting. Euro dollar, Kiwi dollar. Dollar yen's been an interesting currency pair. Also, I'm going to answer some questions here in just a second. And then up next, we've got Forex James in a little bit, which would be awesome. Okay, so yeah, look at dollar yen pulling back. Actually, this might be a trade for me today. I might be long dollar yen today. I'm going to take a closer look at that one. But you've got this downward trend here. Broke this level. Testing support. I do like the economic only score quite a bit here. And is dollar yen a top setup overall? It is +7. Yeah, dollar yen might be a trade for me. In fact, I'm probably going to take that trade after stream, just for context. If I take that trade, you guys can see every trade I take inside of our Discord VIP group. If that's something that you're interested in, we'll drop a link here to where you can chat our support team. If you would like to get notified anytime I take trades, so full transparency, I don't win every trade. I would never promise you to do so. I've been doing this for a long time. Not everything I touch is gold. Trust me. I definitely, get some great trades. I also have some terrible trades, but I have, shared publicly a track record for many years to, show you're not wasting your time if you consider taking time to join our educational group and learn along with what we're doing in the markets and why we're doing it. So if that's something that you're interested in, shoot us a direct message on our website right here, and we can get you some information. Again, we do offer memberships. You can get a monthly membership or a lifetime membership, and just let them know you're watching the stream right now, and that we'll give you a nice discount if you message in during the stream. Okay, so let's take a look at some questions. Let me just double check that our questions are okay. I believe they are. So let's do some questions real quick. Rapid fire questions. We got a couple minutes here before Forex James hops in. So, okay, let's go to George's question. They've been trading for 1 to 3 years. Primary goal right now is to become a funded trader. How do I stop myself from revenge trading after taking a loss? Great question. So the thing is with revenge trading, right, is the challenge with revenge trading is if you're in a situation where you feel very inclined to take a revenge trade, meaning you lost some money and you're frustrated by it and you want to get it back. The problem is that first trade that you took was too big. It had too much of an impact on you. Trade size, in my opinion, should be small enough that when you take a loss, it's like whatever. And when you make a win, you're like, okay, nice. If you don't have that level of like kind of, if your obsession of one trade is too high, to me, that's a really dangerous red flag. Like any one trade in my many trades that I'm taking over time, I don't want that one trade to mean so much to me that if I lose it, it's like a breakup or something. I want, when it comes to trades that I'm taking, to just be another round in the fight, if you will. So I think, first of all, your position sizing is probably too big, that it's making you hurt too much to take a loss. That's a big one. The other thing is, when it comes to trading and having a revenge trading, tendency, the problem is, I think that, again, like I said, it's position sizing. It's also just not having a set of rules that tells you when to take trades. Like if you have some sort of thing, I recommended this to somebody else who asked a question recently. They asked, a similar thing. I keep forcing trades. Do yourself a favor and use like a Google form. Like look up Google form, it's completely free, and make a form that you submit each time you take a trade. Have that form ask you a couple questions to fill out before taking the trade. Like, for example, did I risk appropriately on this setup? It's like a way to automate your journaling process. Instead of writing it in a book, you can create it in a Google form and just submit information about the trades that you're taking. Some might really benefit from doing that. Next question is from Robbie. They've been trading for less than 1 year. Primary goal right now is to learn about fundamental analysis. And with the current US and Middle East trades taking place, how do you see the price of crude oil changing? So if we take a look at oil is up. I would still say that, the US and Saudi Arabia shaking hands and all that stuff, I do think that plays a role. But I think that when we talk about oil prices, fundamentally, what I always pay attention to is supply and demand. And when it comes to demand, if the economies of the world aren't going to shut down, that's elevated. And when it comes to supply, right, do we have major wars that could be cutting into the supply? Do we have a lockdown that's cutting into the supply? I would say that there's just not a massive dry up of supply. So that's kind of a neutral factor, right? Or even a bearish factor for oil. So I still think that the bigger surprise right now is that the economies of the world are probably not going to go into a recession when sentiment was so ugly for the last few months. So that's my thoughts on oil. So I actually lean kind of bullish on oil at this time. Robbie says they've been trading for less than 1 year. Primary goal is, I'm sorry, we already did Robbie. Matt says primary goal is to find a profitable trading strategy. What are the advantages and disadvantages of trading gold outright versus a gold ETF? I imagine outright you mean futures versus the gold ETF. I actually have a video on this topic. James or Chandler, one of you guys edited this video for me. It was a video in terms of the differences between trading XAU USD, the gold CFD, GLD, the ETF, and gold futures. And there are some nuances, some tax implications. There are some better costs. The long story short, I would actually ask that we could maybe drop the link to that video for people who are interested in that subject. But what I would also say is that when it comes to each one of those, if you're a longer term swing trader or position trader, in my opinion, GLD is the way to go. If you're a short term trader, day trader, XAU USD or gold futures would both be probably better. GLD has some pretty good competitive holding prices. Like, it depends what you are. Like, if I traded gold on an hourly chart, probably would stick with gold futures. If we're talking, I'm holding it for 3 weeks at some times or 4 weeks, and I don't want to do the rollover rate costs and things like that, GLD is what I choose. So just depends which concept you're in. Boom, there it is. Thank you very much, Chandler. So we dropped the link here. Save that for yourself if that's easier for you. Okay, let me jump through some more questions here. Okay, next one is from Marco. Been trading 1 to 3 years. Primary goal right now is to find a profitable trading strategy. When you miss your entries on NASDAQ, why don't you enter with a partial position and at least earn something rather than wait for a pullback, which didn't really happen recently due to the strong momentum? Marco, it's a fair question. FOMO is real. Trust me. I have many long positions, and I have certainly benefited from the rally in stocks. However, do I wish that I was long the NASDAQ with a tight stop and trailing it right now? Absolutely, I do. However, I'd rather be, and this is a really important thing you have to think through, I'd rather wish I was in a trade that I'm missing than to force my way into a trade and wish that I had never done that. So when it comes to NASDAQ moving in one direction, I have a system that I've stuck to for over the years that I don't plan on deviating from and breaking that rules. I'm not going to, like, I'm missing it. Let me just at least enter half. That's a slippery slope. That's dangerous, right? I wait for trades to come to me, and sometimes that sucks. Sometimes it's painful, and you're like, dang, did I really just miss all that action? And that's going to happen. Doesn't matter what you choose to do, because guess what? You enter half right here, don't have a proper plan for doing that. You're just like, oh, I don't want to miss it. Well, now what you've done is, where's your stop loss going? Like, for me on NASDAQ, I know where my stop loss would be going if I took a trade. I can tell you right now, like, it's not rocket science. I have to wait for this to come, and my stop loss is going below that level, probably around here. If I enter the trade right here, look at my risk. It's huge. That's where I would know I want to stop out, right? But if I wait for this trade, the risk is much smaller. Do you see the difference? So I've got to wait for trades to come to me, and I'm not going to break that rule. And I would encourage you to, like, if you're thinking about like breakout trades, if you want to trade in that style, like, obviously I wait for breaks and retests. In this case, the breakout, just the clean break, was the way to go. But there's always examples of where that works amazing, and there's examples of where that was a really stupid idea. So the point is, stick to what works over the long term based on your back testing. And that's why. Loris has been trading for less than 1 year. Primary goal right now is to become a funded trader. Do you think everyone can become profitable? I mean, more than 85% of people lose money in the short term, and 99.8% of people lose money in the long term. I refuse to believe that all these people are just gamblers or lazy people. who wouldn't do anything to become profitable. Is there something else to know other than position sizing, technical and fundamentals, and the willingness to work hard? That's a great question. Do you think everyone can become profitable? Well, sorry guys, I hit back on the browser, which kicked me out of the stream. I'm still here. Give me 1 second. I'll just share my screen again. So it's a great question. Also, just let me know if you can hear me and I didn't mess up anything on the sound or anything like that. It's a great question because, the answer truly is probably not. Like, not everybody is meant to be a trader, and that's okay. Just like I am not meant to be I grew up playing piano. I'm probably not going to ever be a, top tier concert pianist, right? And that's okay. But the reality with trading is kind of a brutal one. Most people just don't have. Do I think like more people could become profitable if they were 100% in it? Yes. But most people look at trading and they kind of pass through, just like most hobbies, right? I play chess as a hobby. I know it's a hobby. I know that I could be a higher level chess player, 110%, if I was so into it. If it was my thing, if chess was my thing, I know it's a bit arrogant, but I know I could be a great chess player if that was my 100% thing. I like chess, but I don't love it. I'm not passionate about it. But I think if we're being brutally honest, I think that's where most people in their trading are. They're like, I like trading. It's cool. It's cool to make money while I'm at home. The difference is for the people that you see on these streams, they are obsessed with markets. They are passionate about this subject. This is their thing. Trading is my thing. Doesn't mean I'm the best in the world. Doesn't mean I make millions of dollars. There are times where I'm up 10 grand on a day, feel great. There's days where I'm down $15,000 and it sucks, right? Trading is hard. Even at the highest level, it's hard. The difference is I think that the people who make it to that highest level, they love this game and they study it intently and they spend hours and hours a day. You can't get them away from it, right? And I'm not talking about punching buy and sell. That's not what I'm talking about. I'm talking about they're listening to podcasts. They're studying people. They're learning about this. They're back testing on the weekend. Those are the people who are going to make it. Most people in anything don't go that hard at it, right? That's okay. Not everybody is gung-ho. Their whole life is trading. And that's the reality. The only people who I know that make it, I spoke with Tori Trades. You can just tell. We had a podcast yesterday in person. It was a lot of fun. And you can just tell that's her thing, right? You can tell when James gets on here, that's his thing. Like they love this stuff. They love this game. They love, the community of trading. That's the other thing. Sometimes you hear people say like, oh, the whole trading community is toxic. That to me shows you don't truly love it, because if you truly love the trading community, there's some wonderful people in it that are just as insane as we are and love this game. They love the concepts. They love the learning about markets and the way they work. Sure, there's toxic people in every community, but there's a lot of people who love this stuff for the right reasons. And they're just interested in the global markets. And they're interested in economies around the world. So great question. But I think that the difference is passion for most people. You may think you're passionate, but you may not be as passionate as the people who are really, truly making it. That's a hard pill to swallow. But like I said, I love chess, but I'm not passionate enough to make the cut, if you will. And in trading, unfortunately, not making the cut means losing money. So it sucks, but that's a harsh reality of it. Last one really quick, and then we're going to pass the show over to Forex James. Dennis has been trading for 1 to 3 years. Goal is to find a profitable strategy. What do you think about Powell saying he waits for data to make decisions? Shouldn't he be able to foresee some events, good or bad, in the short term at least? Thank you. It's hard, man. Powell has a really hard job. His job in the eyes of everyone else is, hey, you should be able to see the future with the economy, whereas the economy is very difficult. And I actually think that the Fed in recent years actually follows the 10-year. So the Fed follows the market, not the market following the Fed. The market is like the ultimate voting machine. If many researchers across the globe think that inflation is going to really ramp up, the bond market kind of leads with the Fed. Back in 2022, when the dollar was ripping and yields were ripping, the Fed was kind of following the yields, right? They're following like, oh, the market thinks we're going to rate hike, so we hiked rates. So it's hard. It's a very difficult job to predict the future. The economy has millions of variables that go into it to determine what's going to happen with inflation and jobs. When the Fed says that they're data reactive, which is what we are on this channel too, by the way, we don't try and predict the future. I don't try and predict what the jobs number to the T is going to be. So it's something to think about, right? The Fed is being reactive too. So are their insights important? Yes, because how they interpret the data can be skewed. Like recently, you've seen Powell see some of the same data as we are, and I kind of disagree, right? Where he's like, inflation. We saw 2.2% or 2.3% yesterday. Inflation seems to be coming down. Look at oil prices. Look at commodity prices. They're dropping. So even if he is reactive, he can react poorly or react correctly. We don't necessarily need Powell to be a fortune teller. And in fact, he got in a lot of trouble when he tried to be a fortune teller in 2021. Remember when Powell kept saying inflation is transitory? That was him not being reactive. That was him being proactive and saying, well, let's not hike rates like crazy, because if we do that, we could crash the economy. And many people thought that the inflation caused from COVID would do like this. It kind of did. He wasn't wrong, but the timing was early. And so they kept interest rates low for, in hindsight, too long. And that required some really drastic measures in monetary policy to fix that problem. So he has a hard job. If he acts too fast or acts too slow, people hate him. And by the way, no matter what he chooses, people hate him. He has one of the hardest jobs I can think of. Anyways, guys, up next, we got Forex James taking over the show. Just a quick reminder, if you'd like to join our free Telegram channel, we'll be sharing lots of chart updates there completely for free. We'll drop the link here in the chat to where you can find that and stay up to date, even if you miss a stream, with charts that I'm watching each and every day. So we'll drop the link to the Telegram channel, and then we'll roll a quick break here in just a second to bring in Forex James. Stay tuned.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Happy Wednesday. Hope you're all well. Hopefully no margin calls. So I think the markets have been quite straightforward over the past couple of hours or day or two. In yesterday's stream, I was talking about waiting for these gap fills to possibly get short. So we've had those. The problem is this morning, I just realized I can't really take any positions because I'm not going to be here. I'm going away next week on Monday. I've got a bachelor party or a stag do, depending on where you're from. So I'll be away Monday to Friday. So I'm not really wanting to place any trades because I'll be completely honest with you. I'm probably going to be too drunk to be able to manage trades and things. So I'm just going to call it a week off and pick up the week after. So yeah, no entries today. I'm still short euro dollar, dollar cost averaging into that market. Very uneventful so far. Brought my average price up slightly, but yeah, nothing to report on at the moment. Pretty much break even. But yeah, I still like the idea of going long on the dollar for now. I still don't see a reason to short it, to be quite honest with you. We've got smart money that remains long. Fed's on pause. So I think dollar yen, for example, here, we spoke about this entry actually yesterday on stream on this 0.5 level. We came down. I mean, I might be speaking a little bit too early here because this candle's a bit intimidating, but we've come down to this 50% level almost perfectly. and pretty much filled this gap in, but there's still a little bit more room here, so I might be able to, like I said, I'm not looking to take the trade, but if you were, you might be able to get slightly lower entry if we do fully fill the gap here. What else is there? New Zealand dollar also looks quite good to the downside, or sorry, New Zealand dollar, US dollar looks quite good. Pound US dollar, I like the idea, but it's not a trade I'm overly invested in yet in terms of not actually being in the trade invested, but invested in terms of sort of the idea behind it. Euro pound, I actually might take an entry on this one just because I'm quite happy to DCA Euro pounder with no stop loss and just let it go and set some pending orders. So even if I am a little bit drunk and I'm not on the charts, at least then the trade can run and I don't need to do anything. Because as we've spoken about a lot previously, Euro pound is a very mean reverting pair. So even if it did come up to the previous highs, as long as my position size is small, I can get back in. So there's no problem. Oil's tricky. Again, I spoke about this one yesterday. I was waiting for an entry down slightly lower at these previous highs, which didn't happen. So I've not got an entry here, unfortunately. But yeah, it's a little bit late now. I don't have much of a fundamental bias on oil. I know there was something last night, wasn't there, with Trump and Saudi. I'll be honest, I didn't listen to it. I've got no idea what was said. It was probably a little bit unprofessional from me, but like I said, I'm going away next week. So even if there's something interesting, I can't do anything about it. So I'll just chill for a bit and do some research on the weekend. Okay, let me see what's going on. Hello, Bashi. Good to see you. Mehdi, Andreas. Thoughts on dollar Swiss? Yeah, I've got dollar Swiss here, actually. This was another one on the watch list. It's basically all dollar crosses. So I'm interested in buying dollar primarily, selling off yen and Swiss. Obviously, we've got what I view a slight rotation from the risk off market to the risk on, which means ideally we're going to see the yen and the Swiss start to lose some value. However, we're not seeing that really at the moment. I mean, yes, the yen's lost value, but it seems to be putting up a fight. The dollar's struggling, euro's pulling back to the upside. So whether this is just one of those days where we have a little bit of a counter move, I don't know. We'll see. Either way, it is what it is. I know I'm a bit flippy floppy today, but like I said, not really got much of a what do you call it? Much incentive to be in the markets right now. So some gold. Yeah, I do still like gold shorts, but there's no way I would be shorting it here. This is a bit of a death trap to try and short. I think actually this would have been a great trade for scalpers. Just get some momentum on the break of the support. I think that could have been a nice trade, but I need to see this gap get filled. I don't like to see gaps in. I know obviously Nick was speaking about the gaps in, I think it was GLD. I don't trade GLD, I trade XAU. And in XAU, we don't really have gaps. And if we do, they often get filled. Actually, maybe not. There's one here that's not been filled. So maybe I'm lying. But yeah, just for my own mental peace of mind, I would need to see that gap get filled. Same thing that I was doing with euro dollar. I couldn't have taken the trade before this gap got filled. It got filled now. You know, like I said, if I wasn't going away, I might have been a bit more interested in actually taking that short position. So yeah, point is probably back up to this previous resistance or fill this gap somewhere in this area. Then yeah, I might be looking to go short. I just don't see a reason that gold can maintain higher levels. I think coming back down towards 3,000 at least is plausible. Yeah, like I said, I just don't see any factors for gold right now. Gold shorts only if you're a 1 minute scalper. I've got to disagree there, ball out. But we do this, don't we? We have our agree to disagree moments. What else have we got? I think that's it. Actually, there's kind of a quiet one. I'm not set on euro pound. I know earlier I said I might take a DCA position or start a DCA position on this one, but we'll see. If we don't come back up to this previous resistance, I'm not going to bother. As I was saying yesterday, I think the New Zealand economy is pretty weak. I again don't see much of a reason to look to buy New Zealand dollar right now. So if we can possibly get the US dollar to start behaving a little bit and pull back, I think that the New Zealand US dollar position short could yield something quite nice. We're also seeing a bit of a reaction here on this fib level on the 0.618 and the 0.5. My cat's here. I'm not sure if he's going to start meowing, but we'll see. He's always got some knowledge to drop. Last time, he told me to full margin gold. I didn't do it, but it would have worked out quite well. It's a good day when James is on the show. I appreciate that, Kwang. Thank you. It's a good day when you're in the chat. Cat sounds bearish on gold. Yeah, I don't know. I mean, he set me up a few times. It's like if I don't get the food he likes, then he'll tell me to take the wrong trades. He's a little bit manipulative. I've got to go to the butcher today actually and getting some food. We've got him on a 70% raw diet. You can't need a stop loss. Well, you know what they say, curiosity killed the cat. It's like curiosity into margin calls, I guess, is his equivalent. My face is built different. I'll try my best to take that as a compliment, but yeah, that's going to take a lot of effort to try and take a nice away. Equity's doing quite well, or indices doing quite well. Nothing too eventful today, but we are seeing pretty much or almost a full correction here on the S&P, which is lovely. So I was buying not the S&P directly. I was buying into the UK or the Vanguard version, which is basically a dividend-paying S&P. It's like the equivalent of the S&P. But it's priced in pounds is like the biggest difference. So we're not really there yet, but I've been buying this whole dip. So I bought, off the top of my head, it was around here, and I bought again at the bottom. So I've got quite a large position actually in the S&P. So I'm waiting until we can start filling in these gaps, possibly come to all-time highs, and then I'm going to cash out, call it a day, and I'm going to, I don't know, I might go and blow it on bottles and models in Ibiza or something. Who knows? Which central bank is more likely to cut? I'll tell you what, I can actually give you the exact data. Hold on, let me just pull it up for you. In fact, I can't show you, but I can tell you. Give me 1 second. Just need to load the thingy. So what did you say? What did you want? RBNZ or BOC? So RBNZ has a 89.16% chance of cutting to 3.25 in the next meeting. The Bank of Canada has a 96% chance of holding rates at 2.75. That's obviously according to the model I've got. It does vary. When you're looking at, I would say CME is obviously the most accurate for getting fed. But if you are looking at other things, so whether it's from bank reports or another source, things like the projections for central banks, there is no way to actually say. So a lot of them are built off proprietary models. So they will take into account different factors. So they'll differ slightly. So the model I've got for the US, for the Fed, is actually slightly different from what CME says. But generally the same. If there's a huge majority one way, it's generally going to be about the same. All right, let me just catch up on what's been said. Your cat stares at you. Cat stares at me all day while trading. Yeah, mine has a habit of coming up at about 9, 10 a.m. screaming, and then it'll just come and sleep on my lap while I trade and do work, which is quite nice, but I'll be honest, bit of a pain. It's like that intern that you hire and he just doesn't seem to leave at the end of the contract. Always hanging around. Can I do a pull-up? Barely. Yeah, no, not really. But I'll be honest, who needs pull-ups when you've got about 50 billion in the bank account? I mean, who cares? I'll just pay someone to do a pull-up for me. Bro, I joined you through A1 Trading channel, and I was wondering where the hell are all comments. Oh, I see. Okay. Yeah, it can be a bit confusing. I've done that before, where you click on the A1 stream, and it's like a quarter of the viewers, if less. And it's like, what's going on here? Has Nick fallen off? Hi, James. What do you think about New Zealand dollar Swift? Awful. Both very weak currencies, useless. There's no trade there in my view. Market's stuck in a sideways range. New Zealand dollar is, not great. I wouldn't want to buy it. The Swiss is economically slightly better, but I wouldn't want to buy that either. So the problem with the Swiss is that, as I said earlier, we've had a rotation from risk off to risk on, which inherently means we're going to see the Swiss start to trend lower, which we have done. Whether it will come much lower, I don't know, but it wouldn't be a surprise if we do come into sort of previous tariff levels or pre-tariff levels. The secondary thing with the Swiss is it theoretically cannot be that valuable. It's not likely to just continue trending to the upside. And that's because of the S&B. They would likely intervene if we did start to see the Swiss start to gain significant strength. So it's the way I view the Swiss is just a proxy. So if I was very bullish on New Zealand dollar or very bearish on New Zealand dollar, but it wasn't really anything else to trade it against. So if I was very bullish on New Zealand dollar, but the dollar, the US dollar, the pound, the euro were also pretty bullish in my view, I don't have anything to trade it against. So I would then default to Swiss. Because the Swiss is generally quite stable. Obviously, unless there is some event like a big risk off sentiment or whatever, you get the point. Hopefully. Can you tell us more about dividend paying S&P 500 fund? As so many companies are covered. Didn't know that was an option. I'll be honest, Matt. I don't know that much about it. All I know is that it's slightly undervalued compared to the S&P. And when I say slightly, it's very small. So if the S&P moves at 1%, this might move up 0.8, 0.9%. So, not awful, but the dividends are quite nice. I'm not sure what I actually get paid in terms of dividends, I'll be honest. But I've been paying into this pretty much since COVID. Actually, I've had a really nice run. Obviously, it's through Vanguard. I'm not logged in or anything, so I can't see my entries here. But it's kind of the best option really if you're in the UK, unless you've got another thing. But like I said, I've got my retirement account with Vanguard, so I opened an ISA account with them as well. So I just chose this option. Didn't put much thought into it. I'm not an investment guy. I'm more of a CFD degenerate. That's about it. As I said, I keep everything I do very simple. My trading simple, my strategy simple, my analysis is simple, my finances are simple. I think the more simple you keep things, generally, the better it's going to go. 50 billion is in the bank is worth without your health. Yeah, see, that's what poor people say. I'm joking. I completely agree. James, what do you think about US 30? Let me just see. It's still the top reading on the Edge Finder. Very bullish with a score of 13. So automatically, it makes me want to buy. But I've got the same problem I had on the currencies where we've got this gap. I don't want to buy into this market before we fill the gap. So I have to see this get filled. Then, maybe then I'd be happy to get in. But until then, I can't do it. But bias is to the upside. But when we fill the gap, that's when I would probably start looking to actually get in. Morning, James. There are two gaps on the S&P 500 and US 100. What would be a strategy / a way in to find a point of no return where the gaps are going to be closed? I only see one. Oh yeah, there is two gaps. You're right. There becomes a point where it becomes. Although I said like on the Dow, I said I wouldn't take a trade until we fill the gap. That is only the point for a certain amount of time. So what I'm not going to do, if if NASDAQ comes all the way up here, I'm not still going to be sat here waiting or saying, I can't buy the NASDAQ because there's a gap down here that's not being filled. That would be stupid. It's a cost of opportunity situation where it becomes a point where being or waiting for the gap, trying to be safe, is actually just costing you more than taking the risk that you would take anyway, if that makes sense. So to be quite honest with you, I'm actually not that interested in this gap anymore. I'm more focused on this one. So if this gap gets filled, maybe I would then take a long. If this is stopped out, so let's say we take the trade and it doesn't work, then my focus comes back onto this gap, and it would sort of just go from there. I'll be honest, I don't have a set rule list or a set strategy for trading gaps or waiting for gaps or anything like that. It's more just a discretionary approach, I guess is the way to explain it. I've got an S&P500 ETF. We'll now also check the dividends. Yeah, I've got it so the dividends just pay back into the S&P or back into my investment. So it's like a self-oiled machine or an oiled machine, whatever the right word is there. All the best traders I've come across have the simplest strategies. Yeah, I would agree. I think it's also a frequency thing, because if you've got a super complex strategy, what are the chances of that coming up once, twice, 3 times a week? I don't know. I'd say they're pretty slim. So if you just scaled it back a bit, and yes, you might have slightly lower quality trades, but the quantity, generally, obviously, again, if this is assuming you're profitable and you've got well-managed risk, generally, I would say that the profit you would make is going to outweigh that anyway. That's just my view, but yeah. Chinese food versus Thai. I'll be honest, Thai food takes the crown. Pad Thai, summer rolls, yeah, by a mile. I was put off Chinese food a little bit. I think UK Chinese food. So if anyone, UK people will know what I'm talking about. If anyone's been to the UK or hasn't, you won't know. But the UK has its own style of Chinese food, which is more, it's just fried. Everything's just fried. So it's good, but authentic Chinese food's good, but yeah, I went to Australia to meet an old business partner of mine, and I went out with some of his family, and they were Filipino, and they told me to try a chicken foot. I'll be honest, I like food. I'm a bit of a fat guy on the inside, even on the outside, but it was, and I don't mean this with any disrespect, it was disgusting. It was like jelly, but hard on the inside with the boat. Oh, no, couldn't do it. Absolutely not for me. But yeah, I love Asian food generally. Korean food's amazing. Chinese food generally is really good as well. But yeah, if I had to choose, it'd be Thai food by a mile. Or Vietnamese food, actually. Sorry, some rolls are Vietnamese. Anyway, sorry, I'm letting my inner fatty get out. We should probably stick to charts, not food. I'm getting hungry now. Bashi, see you later. Yes. Yeah. It's a shame I don't really have any restaurants like that right near me. We've got a pretty good Indian, but that's about it. I live in the middle of nowhere, so I'm a bit limited, really. Okay, right. Let's get back on track. What are we talking about? Actually, I just realized it's a shorter stream. Oh, sorry, I've got a shorter segment today. So I've got about 6 minutes left. So if there's any questions, let me know. I'm happy to answer. I'm more raw fish, fruit, and vegetables type of diet. Oh, you're one of them ones. Yeah, I like sushi with the raw fish. I'll be honest, I'm not a fruit guy. I love vegetables. Yeah, vegetables are my jam. But fruit, I don't like it. I don't like sour things. And fruit in the UK generally is pretty poor quality. It's like blueberries. You never got consistent blueberries. It's either mushy or it's sour, or you get like a perfect blueberry, and then the rest of them are just disappointing because it's set a standard that the rest just don't meet. So yeah, fruit in the UK, other than grapes, are pretty useless. Thoughts on Aussie yen? I think Aussie yen is tricky because actually, let me just double check before I tell you anything. So the RBA has a 99.2% probability of cutting to 3.85 in the next meeting. Bank of Japan's holding, but they are dovish. Real rates are down or in negative. So yeah, it doesn't. I would say, yeah, to be honest, I would lean more towards buying this market, but not for a long-term trade. It would be more of a short swing or an intraday position to buy Aussie yen, to be honest. You could also just capitalize on this trend. I think the trend is pretty clean here. I don't see anything compelling, to be honest, in terms of technicals. Suppose we've got a gap here. So yeah, I'd be waiting for something, and I'm kind of forcing this a little bit to try and find something, but I guess it would be something along these lines. It'd also bring the RSI into a little bit of an oversold area as well. So that would be pretty much it. When am I moving? I'm aiming to move at the end of July, start of August, but yeah, we'll see. So I've got the wedding that I need to go to is at the end of July, so I'm cutting it quite close. But yeah, I need to get out of this country. What percentage of your monthly income do you invest? Matt, that's a good question. I've actually done a video on that. So I'm not going to tell you because I want you to watch my video. I invest pretty much equal portions of my income into different things. I actually don't live on very much. That's why I don't have flashy things, because I don't care for it. I'd rather put that money into long-term investments. But yeah, I did a video. It's on my channel. It's called I think it's how I spend $10,000 a month or something. It looks very clickbaity, but it's actually just explaining long-term investments or how I do it. Which positions am I currently in? I think we've got a position on oil. I didn't take it, but we do have that in the Discord. I'm also in shorts on Eurodollar, currently DCA. That's it though. Like I said, I'm going away next week, so I'm not going to be able to trade. So need to what was it? Yeah, I need to stay pretty light in terms of positioning. I'm in Swiss yen as well. Aussie dollar. This was Euro Aussie. This was a pending order we had that we actually cancelled because it missed our entry, so scrap that one. Swiss yen. I am still setting this on a long-term trade, but again, this is a trade for the next 1, 2, 3 years, even maybe. So I don't really like to cover this one every time I do a video or a stream, because it doesn't change. The idea behind it hasn't changed. It's the same premise, same thesis. It's just now a case of waiting. What else do we have? That's kind of it, actually. Yeah, pretty much it. Let me just have a quick look. Let's see what the Edge Finder's telling us. When was this updated? The 9th. Okay. So the Nikkei's been bought back. The Nikkei makes sense, because if the sentiment around the Bank of Japan is maybe not worsening, but it's dampening, shall we say? Because obviously we went through that period at the start of the year where we were kind of expecting the Bank of Japan to hike rates. It was a bit more optimistic about that whole thing on their path to normalization. We saw the Nikkei actually take a huge dump as well. That's kind of unwinding a little bit in my view. Although I am still very bullish on the yen for the long term, I think short term, yeah, probably buy Nikkei, sell yen is the move. That's not financial advice. Russell down also makes sense. Obviously, we're not getting the rate cuts by the Fed. Fed's on hold. Yeah, completely expected. Market sentiment. Let's have a look. Oh, sorry, retail sentiment. Don't want indices, don't want metals, don't want commodities. Let's just look at major miners. This makes me a little bit uncomfortable with that dollar Swiss long position we just discussed. Retail seems a little bit stretched to the long side. So what I would maybe like to happen, and this is more just a hope. I don't like to use hope in trading. I think that's a bad thing to rely on. But like what would be an amazing situation, I guess you could say, is if we have a flush to the downside on dollar Swiss, wipe out some of these long positions by retail, then continue to the upside. I think that would be a beautiful situation. There's nothing else too interesting. Euro pound, as I was saying earlier, those shorts got retail majority long, so that also is quite a nice little confluence. Yes, OT, I think that's right. How Pro Trader spends 10,000 a month. Obviously, yeah. The thumbnail is very clickbaity, but that was the point. It was to try and get those, get those clicks and show a realistic side of things. Okay, so I think that's it. I think, yeah, we're pretty much done there. Okay, sweet. Sorry, guys, okay, so I was reading a message. What's the correlation between Bitcoin and US dollar? Also AUD and S&P. Why are they correlated? Okay, I'll try and get through. We've got Chris Pulver coming on in a minute, though. Chris actually might be able to give you a better answer than me. But correlation between Bitcoin and US dollar, it depends obviously what exactly you're trading. But relationship between Bitcoin and US dollar, obviously, if we're trading BTC USD, Bitcoin is priced in US dollar. I think Bitcoin is priced in US dollar anyway. Or does it change depending on the platform? I'm not sure. Actually, I'm not sure how Bitcoin prices are actually done, but I would assume that they're inherently priced in US dollars. But I would also say if the US dollar is rallying, it would make sense. It would make sense Bitcoin goes down. I would say, I don't know, actually, I'll be honest. It's tricky because I would put this more down to a risk sentiment rather than direct correlation. So if the US dollar is being bought up due to risk on, risk off, tariffs were obviously risk off, but the dollar went down, so it can move either way, clearly. But like this period where we had downside, I view Bitcoin as a bit more of a luxury investment. I think Alan Perez described it really well. I'm not sure if he's here, but I've kind of stolen this from him because I'm not a crypto guy. But yeah, it makes sense that Bitcoin is something that you're not going to, or the majority of people are not going to invest in every month as a core part of their sort of retirement plan or the long-term investment plan. It's more, and the way I view it, it's more of a case of, oh, I've got a spare $200 or I've got a spare $500. I'll throw it into Bitcoin. Or I've maxed out my 401k for the year, or I've maxed out my ISA for the year. I'll put the rest in Bitcoin. It's not a case of, oh, I'm struggling. My paycheck's not going as far. First priority is buy Bitcoin. I don't think so. Obviously, you've got crypto bros, but they don't really count as people in my view. They're a bit more like chatbots. Okay. Sorry, guys. We've got something going in the Discord. I'm just keeping an eye on it. I'm sorry. I'm just making sure I've not missed anything. AJ all the way to 0.5/0.6 on the monthly. Wait, what? All the way to 0.5, 0.6? I'm not sure. Do you mean like all the way down here? Do you mean like right here? Is that what you're talking about? I don't think so. That would be cool. I mean, yeah, I would quite like to benefit from that, but I'm not sure we'd ever see that. Euro CAD, I don't think there's anything there. Euro Aussie doesn't have anything. Euro Yen. OT. I would assume he means Aussie US dollar because it can't be Aussie Yen. Surely you're not talking about that. I mean, that's a crazy call to make. Right. So, okay, let's assume it was Aussie dollar 0.5, 0.6. I think 0.5 is very ambitious. 0.6 is possible. I mean, we've already been to 0.6, but 0.5, yeah, maybe. Yeah. I wouldn't be trading to 0.5, put it that way. Okay. Do you think MFF is coming back? Actually, it's interesting. My Forex funds just had their court case got dismissed. I can't do that. Shows I've got an account with them as well. I bought. I not a word of a lie. I bought an account of MFF. I think it was 200K. 3 days later, I log in or try to log into the portal and it's gone. I got 200K account. I think I placed 1 or 2 trades on and then it was gone forever. But yeah, their court case has been, it's actually interesting because the court case has been dismissed. I would expect them to come back, but knowing prop firms and how much they like to take advantage when they can, it wouldn't surprise me if they say, look guys, sorry, you know, accounts are gone, can't do anything, we're going to restart. It wouldn't surprise me. I think the best thing for them to do would be to pick up where they left off, reissue the accounts, and start again with already having a good name. But the other side, the other factor of that, I think, is that I think regulators are actually going to be, or specifically CFTC, is going to be a lot more lenient because it wasn't just the case was dismissed. CFTC has to cover all of the costs for my Forex funds. So I think they're going to be very careful on trying to do the same thing again to another firm without having a serious reason. So yeah, we'll see how that goes, but it's good news. Well, depending on which side of that you lay on. Anyway, guys, Chris Pulver is here to take over the show. Don't leave when I leave. You'll be in great hands with him. Guys, have a great day. I will speak to you all very soon. Stay safe, and we'll speak later.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? How are we doing today? Good. All right, I'm going to update a trade. I just took this one off the trade that I posted on May 12th for Johnson & Johnson. I'm going to take that trade off. So I'm going to reply to that message, trade management, Johnson & Johnson entry for 398, closed for 459. J&J price is cooperating quickly, likely on the fall of UNH. So I'm protecting profit now. Okay, so I posted that on the 12th, which was 2 days ago. I'm already out of the trade, taking a nice little winner. So making about $60 a contract on that one. SPX this morning, also looking decent. Prices are centered. My daily trades looking okay. This one's up about 17%. This one is up to break even, trying to squeeze back some profits. This one's up about 20%. Let's go. This one was pulled in for 280. It's got to be close right now. 280 is going for a 235. Where the heck's my take profit here? So 225 trading at 230 right now. All right, we're close. I mean, price is cooperating. We've got a pretty good centering going on. I've got 3 trades active on SPX this morning. So let's have a look. Let's look at some currencies. Let's look at some stocks. We got the Japanese yen screaming up today. Interesting. Something happened overnight with them? They say anything? This is a move right around 4 a.m. Eastern time. I mean, I didn't see anything in the calendar last night. Nothing about the open that I would expect to see crazy flows like that. But leave it to the Japanese yen to do something silly and difficult to follow. So let's have a look at our charts today.
Somebody just said my dollar yen was outstanding. Good, I guess, if you're short. I mean, are you short dollar yen? Are you short? I mean, are you looking for stronger yen? So anyway, it's all good. This is the J&J trade. I was looking to see if price would, come down to revisit 142, which it probably will. I just, I got a decent chunk of profit within, 2 days. And rather than trading a stock like this, that if UNH, and here's why I'm taking the profit, if UNH basically stalls and starts to gap fill, then you're going to see the healthcare sector, and probably the Dow perform pretty well. UNH is a behemoth. I mean, this company made more money than Google last year, and somehow this thing's down like freaking 48%. So it's been a wild ride. I mean, I've got a ratio spread that's all the way down to 260, so I'm not that worried about it. But it's just wild to see like what is like why is there so much pressure on this stock right now? So anyway, I don't care. It's just a trade, but still, it's been a pretty crazy move. That would be like Progressive Insurance being down 50%. That's kind of how this one is behaving right now. So it's very atypical. I think we're 2, 3, 4 standard deviations way outside of what would be normal. But also that same adage of like don't catch a falling knife. I mean, there's clearly something going on here that seems a little bit more insidious, and so I'm just trying to be careful on how I trade it. Anyway, so far so good on the SPX trades. I should have some ones closing out this morning. So watching here for my dailies. So I'm getting close to that 20% take profit. Close on both actually. This one is actually kind of the crappier one. But if I get 2 of these trades to close, I'll probably just close the third one out just because. So if I close this one, this one's going to be the least amount. I'll probably still just close it and just get all 3 closed out for winners. We got to be getting close. 190 is my take profit. It's trading right around it. 225 is my take profits, trading right around it. This one's a little bit worse. I got in for 220. It's trading for about $2. But if I get the other 2 to close, I'm looking to get out of these trades. So let me bump this one up. So the 225. I guess I'll just wait a couple of minutes. I mean, price is pretty chill. This one's close. This one's close. Hopefully these strike here. So I'm looking for 2 alerts. Like I'm just going to go to the analysis. But if I get close, then I'm going to go into this third one and take a small profit and, have 3 for 3 on the day. Also, if anybody's following along with some big levels. So right now, basically the pain trade was everyone that was so scared in April put on puts, right? You buy puts. The puts went crazy in April, and a lot of them were the May expiration, and that's this Friday. So what is likely going to happen here, and this is my opinion, but I think with this run up that we had, especially through the Monday U.S.-China trade talk that kind of blasted the market higher, I think that the pain trade is all those puts are going to expire worthless. And then at that time when it expires, then you're going to see the market come back down a little bit. So I still expect a gap fill. I'm kind of patiently waiting to redeploy some capital. All right, take profit, just got hit. That 280 turned to 225. So that was 280 to 225. There's a 235 closed out for 190. And then this trade is up a couple of bucks. I'm just going to go ahead and take this one off as a small winner as well. So this trade is trading for, that was a 220. Go into this one, replace, see if I can go for $2. Give me $2. Give me 205. All right, 205. Okay. So 3 for 3 on daily profit play. That's good. All right. Quick update. Gonna send this out. Entry for 280. Closed at 225. So 280 credit, close at 225 debit. Entry for 235. 205 debit. Entry for 280. Let me get these right. So 220. Close at 205. Entry for 235. Closed 190 debit. Two hit the 20% take profit. One I closed manually for the win. Lock in 3 for 3. Okay, so taking winners on those. Good stuff. All right, let's get back to it. Top down. I'm waiting for, here's a couple of strategies I'll be deploying. If we see a pullback, okay, so a little pullback into this gap fill. A couple ways I can trade this. I think that the Trump administration is, they not only flinched hard, but they pivoted hard. I wouldn't be surprised if now the Trump administration, I mean, honestly, you don't really know, but I think that they are now going to go from the, pain is needed and, short-term pain for long-term gain. Like that whole narrative is now done. I think that what we'll probably end up seeing is they will likely celebrate higher highs in the market, right? The only thing that they're going to ignore, and they probably should ignore if they want to sound smart, is they don't want to talk about the Fed. They don't want to talk about that yields are going higher. If the US 10-year, which is going higher, they're just going to stop talking about it. I don't know if the 20-year yield, if we get back up to this kind of Liberation Day, post-Liberation Day rally in bond yields, I don't know if this is going to be something where it's like put the pressure on the Fed, start jawboning the Fed and saying that, they need to do something to cut rates. Look, if the Fed cuts rates, this market, I don't know if it's going to respond favorably to Fed's cut. I mean, I think it should, because that's what it's done for 40 years of monetary policy, but I don't know if it will. And, just like we saw last year with September's cuts, like this is my biggest question mark of what happens later this year. Because if the Fed cuts and this thing goes higher, I mean, honestly, this is still good for stocks. I mean, participating in the stock market should be good. I don't think there is crazy amounts of risk like there once was. I mean, this was complete uncertainty around a global trade war, and now things are looking a little bit better, obviously. But we are still a long ways away in the U.S. from inking deals. The U.S. is still underperforming the entire world. I talked about this yesterday in my YouTube session. If you go to MSCI X-US, so MSCI X-US, I'm trying to think what the ticker was yesterday. World X-US. Just go MSCI. This one. So this is basically the world minus the US. Okay. If you look at this from the 12-month candle, so the year, this thing's up like 12+% for the year. The world is up. The US is not, right? So we're up 12.5% for the world. The US is basically back to flat. If you go to an XSP candle here, which is a mini, I mean, this is what the red, I mean, it's a little red sliver. So the S&P is still technically slightly red on the year, but all that is just one giant wick so far, right? Wick up to all-time highs, 20+% correction in the S&P, right back up to where we started, just a sliver of red. I posted this yesterday in my Telegram channel. This is where we are. Like this was a snapshot yesterday at the close. We just carved out a slight green on the S&P, okay? And then you can see the mix in sectors as well. So, top performers, top 20, bottom 20, just kind of an interesting mix of stocks this year. But there's certainly some movers. And, the things that are moving pretty well are definitely like growth is not off the table. Like what was once looking like a massive deleveraging and, growth stocks are going to be struggling. It's like all that came back in a big way. So, look at Palantir up to fresh all-time highs, right? Look at HIMS. I mean, these are two of the more outlier growth stocks last year. I mean, look at the response here. Pulls all the way back to a 200 moving average and just freaking rips to the upside. So, I mean, fun stuff if you're trading those individual stocks. I've been trying to eliminate a lot of the volatility out of the portfolio, trading mostly indexes. I think I've survived the year pretty well. I'm at double-digit returns for the year. Some of my accounts are up almost 20%. I got like 19.2% as of this week's Monday, and still that they're still I'm still mostly green, but fresh highs in the year, which is fine. And we're still off the lows. I think that if we see prices pull back, and this is what I was talking about. Yield. Well, I mean, I'm telling you, Lee, that what happened in April was the bond market broke and forced Trump to pivot. The whole reason we had a 90-day pause is likely because of what happened in the bond market. The bond market is truly more important to the U.S. than the stock market. They're both important, but the bond market is how we grease the wheels and keep this debt machine running. Without the bond market, if our bond market broke, we would turn into an emerging market, and that's what everyone was saying. It's like, the way that our yields are rising, the way that we're devaluing our currency, the way that we're seeing the prices play out, the way that gold has been ripping like crazy, the bond market is what caught the administration's attention. So he may have not have explicitly said bonds, but I'm telling you that Scott Bessent definitely talked about bonds, and that's probably what snapped his attention into like, hey, let's not break this freaking economy. Let's not break the world economy because we're trying to flex our muscles. So anyway, point is, if we end up falling here, I'm looking at some trades. I mean, some really nice trades that I'll probably deploy with some of my larger margin accounts would be a 1-1-1 strategy, which is I buy a put and then I sell a put and then I sell a put. Now I'm doing this on assets that I'm willing to own. You've seen me do this many times in my pulver alerts on trades I like. It's kind of like a combination ratio spread. But if we get a pull back into here, okay, I want that 1-1-1 trade to be something where it's like, I wouldn't mind owning the SPY down at this area or down at this area, because price would have to fall that much more aggressively for any assignment. If I did get assigned, then I would just try to go into repair mode. You know, I think the big question is like, are we going to retest lows? I think that is looking less and less likely. Like, what exactly would be this current narrative to get these markets to go from all-time highs down 20+%, reflexively up 20+ percent, and then back down again? I mean, anything can happen, but I think that this posture is now taking out this level. We're way above Liberation Day breaking points, and I think the bulls have some cushion here that they can ride this out with plenty of support. So a dip, a high or low, I think that's likely to be way more interesting, and probably the current flow, as opposed to just head spinning. Nobody knows what's going to happen. It's up, it's down, it's a bird, it's a plane. Okay. MP, you said you're in that UNH trade. Yeah, I mean, it's all the way down to 260. I would own. I mean, if I own the stock, it'd be like 243, and if I own the stock, it'd be, I mean, I think it'd be like 60+% off of the all-time highs. And this, I mean, by the way, this fair market value is like $1,000 stock. So based on discounted cash flow, let's go to UNH here. Discounted cash flow, it's like, I mean, there's not a lot of stocks that look like this on a snowflake analysis standpoint. So the fact this thing is just down 40+% is insane. Price to earnings is actually pretty cheap. Fair value $1,300. We're trading at $317 right now. So anyway, the trade that I put in, it's a 270 by 260 ratio spread. And if I were assigned, you'll get the $10 credit from the 270 by 260, and then you have the credit on top of that for $6. And if we owned it, it'd be like 243. So I'd own the stock at 61% off. I'd essentially own this at near COVID lows. So number one, I don't think the assignment is high probability. If this thing just stabilizes, I mean, in all reality, and this is another trade I can take to add the income side, but if we stabilize in here with this previous high, I mean, I'd love to see a gap fill. A simple debit spread, you buy a call and then sell a call at a higher strike. A simple debit spread could actually offer up some really nice asymmetry. I did that over here I did that over here, and obviously it didn't work out. So I lost about 350 on that trade. Um, maybe it was $4, but I was looking for, I spend $4 to make $5. That's a slight, 120% gain if I was right. I'm going to take that same trade, and if I lost, let's say I lost $4 here. Well, if I can do the same trade and I can risk $4 to make $5 and I win that trade, well, I wash this away, I walk away net profitable, and I'll probably do that with 2 contracts. So net net, if I lose 400 here and then I gain 1,000, I still walk away positive, like quite a bit. And then I also have a ratio spread that hopefully is going to be like another $600 winner. And all of this is you're surviving a stock that's just fallen in the tank, but at the same time, it's okay, you know. So anyway, what would you own the stock at its current price? No, not unless I want a dollar cost average. If I want to take a little chunk here and say, all right, I'll throw $1,000 at it and buy fractional shares. And then if we came down to these levels here, like COVID lows, I'd say I'd throw another $1,000 at it. That'd be about the only way I'd trade it. I wouldn't be looking at a big position to call the bottom. I would say give it some flexibility to dollar cost average in over, maybe a $100 window. So that would be my plan. All right, that's S&P. We're just flat on the day for S&P. Still very, honestly, intraday pricing is super quiet today. These all are winners. So this is all winners. These are all winners. Price is right in the middle. That's perfect. Go into the Qs today. NASDAQ is up a little bit, 0.34%. NASDAQ has been outperforming the US, or I'm sorry, outperforming the S&P with this move. Obviously there's more volatility on the 27% decline from the all-time highs. But we fell obviously very hard with that, kind of de-risking, and everyone's thinking like growth is dead and AI is going to be put on the back burner for a second. But the same thing applies. Look, there's such a nice gap here. Just don't be a turd and I want to see the market fill it. Like, don't go to all-time highs, because to me, all-time highs mean we got to pull back first before we get bigger all-time highs. So I would rather, in order to target all-time highs, I'd rather see a backfill into here. A little bit of a reversion. We're probably trading, over the average mean. We've obviously had like a big reflexive move to the upside. So point is, if we get a pullback here to like 490, I'm probably going to deploy again like a 111 trade. I wouldn't mind owning the Qs in this area, or obviously down at the lows, and I'm okay with that. And keep in mind that I did say this. I think that this market is going to try to do everything it can to get to all-time highs. I think the fiscal policy of the U.S. is going to return. It's going to be kick the can down the road, still operate at a 6, 7, 8% deficit, and just don't talk about it. Raise the debt ceiling. And look, there's a lot of things that could go wrong in the U.S., right? I don't think the Democrats have any power to fight as far as voting goes. So, I think the majority is probably going to pass the debt ceiling. Trump's going to continue to pass a bunch of executive orders. This trade talk is going to continue. So I think that it's going to be right back into a different tone, but most likely similar fiscal policy to what we saw with the Biden administration. So, this whole conversation I've had, which is you have like the K-shaped recovery, which was post-COVID under Biden. And that was those that have more, those that have not have less. And that's what it's felt like for 5 years. Okay. Then you have this Trump administration that's talking about an E-shaped recovery, which is going to be, this is your K, and then you flatten things out to kind of neutralize, like the haves are going to start paying their fair share, and it's going to be, tough around Wall Street. But it's not that at all, because this created the bond market flinch. So I think if anything, if we're lucky, we get something like this recovery becomes this recovery, right? Where it's like the haves continue to have, the have-nots maybe get a little bit of a hand up and get assisted. But to do that, it's like prices and stuff have to come down. We are in the most unaffordable housing market ever. And I don't know how anybody can argue the numbers. I don't care about mortgage rates. Like, mortgage rates are expensive, but on top of that, it's the house prices that have increased. They have outperformed the S&P for the last 17 years. That's insane. It used to cost about 2 to 3 times salary to own a home. Now it's like 6 times salary to own a home based on average incomes. So it's completely unaffordable at these interest rates, completely unaffordable. So, and you can argue for a lot of things, like it's better now. It's like, it's not. there are definitely pros and cons to, if you were, getting your financial wealth in the 90s to 2000 to now, it's like if you've had 20, 25, 30 years in the markets, there's a good chance you've done pretty well. If you've been trading for the last, 6, 7 years, there's a chance you've seen some basically net zero. I mean, yes, the markets have made all-time highs, but it's not without these crazy 20+% swings that we've seen for 7 straight years. It's just nuts. Yes, the market keeps making all-time highs, but if you're scared through any of those troughs, it just messes everything up. So that's what I'm talking about. Royal Trade says they also want to raise the debt ceiling. That's my point. Fiscal spending, raise the debt ceiling. It's just going to be this very incognito way of doing the same thing we've always done, which is build on debt and have a high deficit and then wonder, when this fiscal cliff is going to happen, but keep kicking the can down the road. So I just think that it showed how strong the financial markets are to flex its muscles and say, look, we're going to do this. And the financial market's like, dude, you do that, you're going to break something. And I literally talked about that a lot last year. I was like, something makes me nervous. Like this market's going to break. Something's going to break. Well, we had a taste. It didn't break, but we had a flinch. We had a test, right? And that's the concern. Is like it was close to getting way worse. But obviously it's reflexive, and everyone that's just like, see, I told you, just buy the dip. It's like, yeah, I know, it worked. Okay. But at the same time, keep in mind, I'm talking big picture here. Keep in mind that longer term, when we're trading at these high ratios, if you go to the Shiller ratio on price to earnings, so here, okay, with these valuations, this thing goes back to 1975 and 1976 roughly. The only time that we were more valued from this Shiller PE ratio was back during the dot-com bubble. Okay. So does it mean that we can go higher? I mean, I guess we can. I guess we can have higher valuations. But if you look at a histogram, when the S&P 500 is this highly valued, the returns are dog shit for the next 10 years. So I mean, it's being thrown out there that for the next 10 years, like we could average like minor, like maybe 3 to 4% a year, maybe net zero. And I don't know if that comes with something that looks like this, where over the next 10 years, the market's, up 30, 40% from the low of April this year, and then it gives most of it back, right? And we just have just constant ups and downs, and it's just crazy volatile. I listened to this podcast last night that over the course of the last century, we've had windows of about 9 to 16 years where the market's returned effectively 0%. I don't think anybody would know what to do if that was the case. If you are a directional trader, this is your wake-up call to realize like there's ways to make money in a 0% return environment. Income trading, option trading, covered calls, lowering your cost basis on things you own so you actually have some gains to squeak out of the market if nothing's going anywhere. So if the market, just think about that. Like think about how you would have to trade if effectively everything was sideways. If everything was sideways every single day and the market barely went anywhere, what would you do? There's ways to make money, but you can't be a directional trader to do that. So, I have this arrow in my quiver. If this is the environment we trade in, I'll be okay. But it's not going to be fun. And everyone that is a buy and hold and a YOLO and a hodler that gets no direction, like you don't know what to do. You're just going to, I guess, eventually lose interest, and you're going to wonder like why you're not growing your accounts at all. But I'm just saying, like, there could be a point where we don't have really any net gains, and I just want to make sure like I can still provide income for myself, right? So anyway, all right, I'll stop on the big picture stuff. I'll stop soapboxing, but just saying, like, we have not been this highly valued for a long time, and usually returns are very lackluster moving forward. So just letting y'all know. All right, Dow. Same thing on the Dow. I mean, look, every index. If you go S&P, NASDAQ, Dow, every single one of them, I love a pullback, right? So this big gap from Friday to Monday, I'd love at least that as a pullback. At least that as a pullback. I do have some puts on the Dow that are looking pretty good. They're out to June. Here is the Dow. Here are some of my trades. Close out DraftKings for a winner. Close out Shopify. I'm going to keep Shopify running for hopefully a nice, it's up about 80% right now. I mean, max profit, that's not bad. Max profit here is around 100 and some percent. So I get 103 divided by 97. Max profit's 106%. See if I can close this one down. We're at 110.56. 181. It's not bad. Let me see if I can squeak out a 190 here. See if it'll give me a generous fill. Nope. 185. Max credit's $2. The nice thing is we're well above the expected move. So by Friday, we shouldn't see Shopify come back down to 106. I want to see it, obviously stay above that. If it stays above 106, I make 100 some percent on the trade. So, all right, doesn't fill. I'm just going to cancel it. I'll revisit this trade. I was going to go into the Dow trades. So on DIA, I have some puts. I've got some puts on AT&T that I closed out yesterday for profit as well. So AT&T, this naked put combo, up about 50%. I'm still going to hang out of these a little bit longer. I closed out another naked put combo. It was a 20, 19, 18, and 17. I closed out all of those for credit yesterday. They were, I think it was $2, $3, $4 of income, and I closed them out for like a 5 or 6 cents debit. So I have some other ones there. Dow, I have some 111 trades. Here you go. So 111, that is up about 75%. This is in 47 days. This naked put is now up about 85%. So kind of the same thing. It's like I'm in good positioning here. Probably by Friday, I will likely look to take some of these profits. The trade's been open for about 43 days. I'm getting to that halfway mark. And, anytime I get to about the halfway mark of my option trades and I have a majority of the profit, 75% of the profit, 80+% of the profit, I'm likely just going to take it. It's more capital efficient to do that versus waiting another, 40 some days to get that extra little 25% or 15% winner. So probably by Friday, I'm closing out some Dow for winners. Would be naked put and 111. NVIDIA naked puts I closed out this week as well. Had a win on HIMS, win on AMD, did some rolls this week, did some rolls on MicroStrategy, did some rolls on Tesla and IWM. I've got some more covered calls I talked about yesterday. I'll be watching those closely. They expire this Friday. I don't think anything's going to get called away. IBIT might be the closest one at 62. We're trading at 58.83. So by Friday, are we going to get to 62? Probably not. If it is, I'm going to roll it. Bitcoin is trading around 103.4. Do we get a surge up here in the next couple of days? I mean, maybe over the weekend. I still think this thing's to come back. If we do get a pullback, at what point? How do you decide? Take profit on RTY and hold it. So what trade are you talking about, Maddie, on RTY? Is the trade that I took? The trade I'm in on RTY is a hedge. I'm in IWM. Like IWM is my income trade. RTY is my hedge trade. So that's only there if I need it. I basically need to finance covered calls to make over $500. Yeah, it's a hedge. So I'll keep the hedge open, man. The hedges are always going to be open. The hedge is, as it's open, if it offers 2 to 1, 3 to 1, 4 to 1, 5 to 1, or beyond, then I'm managing that for profit. But the hedge is there as a defined risk. It's there if I need it. It's just there for protection. I'm willing to say like the hedge is worthless. If prices go up, the hedge is worthless. So I'm not going to manage that and take a smaller risk. I'm like, it's there if I need it, because look, at any point this market could, pivot and go the opposite way, and you never know why. But anyway, that's all. So Bitcoin, watching the all-time highs, I think we still have a bit of a backfill in this area. I hope that we do. I mean, I'm obviously less excited of watching Bitcoin go to highs and then still go higher. I'd be a little bit more excited to see Bitcoin hit highs and then come back in and offer some support. I don't know if we're going to come back to these lows again, but that would be a great spot to still accumulate some more Bitcoin. Small, bigger. I'd probably go a little bit bigger here at the lows because I think we could trade the range. But if we do break to all-time highs, I'm not going to stop it. Obviously, I'm just trying to let the price appreciate. But I think just how this is pushed up pretty inefficiently, I think coming back into these levels would make some sense. Okay, let's go gold and silver. Gold is doing what I said it would do, which is we're going to decline. I kept saying for weeks and weeks and weeks, it's like I can't justify buying gold at these all-time highs. And everyone's like, "What's gold going to do? We're stop caring about gold for a second." It's like, look, you're up a ton of money, so enjoy it, and now just be bracing for a bit of a pullback. It's fine, right? I'm actually more excited now that it's like, good. Find the 50 moving average, find the 100 moving average. Give me some levels to say, now I'm going to start looking at gold futures again. Now I'm going to start looking at GLD again. I'm more interested in positioning for gold. Okay. Up here with a 20+% move from the 200 moving average, I'm not that interested. But in this area, I'm way more interested. I think gold's bull trend is still intact by a lot, but I want to see a pullback, and we're thankfully getting it. I think this also happens to be flowing with the fact that the markets are up and there's less risk. At least the perception is there's less risk in the market. It's more risk appetite, risk on, that gold has taken a little bit of a backseat, right? So I'd like to see this continue to go. Look, this would be a really easy trade in gold. Just watch it and watch it and watch it and watch it. And maybe it's a very slow, methodical pullback. And everyone that's trying to get crazy bullish on gold is just going to have to wait longer. But if we pull back into something like this and we find that 100 to 200 moving average, I like positioning for, more upside. Try to get to all-time highs again. So I like gold. I'm still going to trade it. I'm looking for futures trades and GLD positioning if we are offered up the trade that I want, which is going to have to be a pullback. Silver, same thing. I'm not really going to load up on silver. I already am in a way, but if we came back to 29, I'd still trade silver futures. We came back to 26, I'd still trade silver futures and SLV. So between those two would be SIL would be my silver futures trade, and SLV would be my kind of ETF spot price. If we come back to 29 or 26, I'm watching those levels. Okay, S&P, we already talked about it. Alex. Okay, I'm thinking that we obviously had a great run from Friday to Monday's close. I think we have a pullback coming. I hope we have a pullback coming, because if this keeps melting up, there's not really much that I'm going to do to participate in that melt up. My portfolio is tilted, yes, but I just kind of hate buying it right now. So I think if we get a pullback even to a 570 or 5,700, like, give us a gap fill, and I think that's enough to maybe justify a little bit of a long sample. We pull back a little bit deeper, sure, a little bit deeper, that's fine. But remember, this is what I was going to say earlier. It wasn't that long ago where I said after this high to low, if we come back up here and make a lower high, don't be surprised to see a higher low and a lower high and a higher low. And maybe this is 2025's trading year, right? Everyone's sitting here like, oh, we're going to all-time highs. Like, yeah, we might go to all-time highs, but we also might not. We might not go any higher. We might not go any lower. And the rest of this year is like head spinning uncertainty of like, we still don't know if things are clear. And unfortunately, I think the reality is if Trump administration is going to successfully pass a tax bill, negotiate this trade stuff, raise the debt ceiling, fiscal policy spending continues, I think the crappy part is there might not be much of a chance to see this market by the time you think like, oh, the coast is clear. We're going to be up to freaking all-time highs, and then you feel like an idiot trying to participate here because it's like, I guess I'm buying the all-time high after missing out on all this, which is why we were active. I mean, all through this fear, as scary as it was, I was actively trading this stuff, and it was nerve-wracking, right? But it worked out okay. I'd like a dip. A dip makes me a little bit more excited to trade to these all-time highs as opposed to melt up. So I think the reality is this: we get a trade that because of all the puts that are going to be expiring this week, worthless. I think that the cycle shifts and we have at least a bit of a gap fill. I hope that we do. And from there, I'm looking to participate a little bit more. Probably, like I said, a 1-1-1 trade on my margin accounts where I could afford to own the asset if I wanted to. It might be as high as like a 530. It might be as low as like a 480. It just depends on what the structure looks like going out maybe, I'd say 60 days or so. But July is a big trade war window. I'm not sure what the now new 90-day pause is for China. That might be out to like August-ish, August, September now. But there's still some uncertainty, right? The Fed's looking to cut in July now instead of June. But anyway, it's like there's risk. There's always going to be risk. And I'm just cautiously everything. I'm certainly cautiously bullish. I think this market, might surprise everyone by going to the all-time highs. And that would be my biggest surprise, and probably where I'd be the most upset is if it just goes to all-time highs without anything. No gap fills, no pullbacks. This is just like stupid melt up, right? And then you wonder, like, well, now what do we do? Because maybe this thing goes higher. But I'm hoping we get a pullback. I'd say my probability is higher that we at least get a pullback and just have some type of balance here. Because look, you're getting gaps in the futures market, which is rare. You're getting gaps in the indexes, obviously. But these are not just like little tiny like fractions of 1%. We're talking like 1, 2, 3% gaps. Those usually don't go unchecked. Okay. All right. Russell is trading at 207. I'm still just selling calls. It's boring, but I'm making, anywhere between like 150 to 250 bucks a week by doing that, and I'm just going to keep doing it. And I'll let all of the extrinsic value get sucked out of these covered calls. I'll just keep rolling it. I'll keep selling it. And I own the shares. I bought the shares at like 199. I'm selling $200 calls. I'm just going to keep riding that down to collect some income. And then, like Maddie asked earlier, the hedge was on RTY just in case I need it. But basically, if I sell, let's say 3 weeks of covered calls, I finance the hedge, and then after that, it's all income. And if the market doesn't go anywhere, it's easy income. Buyback, we're at like 40-year highs on buyback, so everyone's buying back stock. Everybody is. I took profit on AMD. I had a ratio spread all the way down here that closed out 88 cents credit. I closed it out for like a 9-cent debit. So this trade is closed. So honestly, like, I don't care. AMD, if it was offering up any retest of this low, if we came back to this low or came back to this structure, then yeah, I'll just either take more income trades or consider some long positions. If anything, I see this structure on the daily chart. We are back to the 200 moving average right here. Okay, we hit a high. Is this going to set up some type of head and shoulders pattern? Maybe a pullback in here for a higher low. If we come back to like $100, it's not a bad trade to look at. The big picture is, above the 200 moving average, this is a buy zone. Look left, look left, look left. You got lots of upside targets here. If you're looking at some structure, maybe there's a chance to buy a dip around $100. Okay. VIX 1839, a little bit up on the day, nothing crazy. Move index bond volatility is down. SPXY, that was a trade that I bought during April's dip. DXY, just watch it. We're still on this trend line. We don't have this like aggressive bear market on the dollar. I still think the dollar is a sell trade. I just think it's here or here. Until we get more confirmation on the dollar. I did take a trade yesterday though. I actually meant to post this in A1 for Forex, but I bought this yesterday. This is during my YouTube session at 3 p.m. I bought yesterday around 111.82. It was a market order, but you can still take this trade if you want. I think the trade's still valid. So basically, I'm up about 20 pips right now, 24 pips. But I bought here, and I put in a scale-in order. I'm going to buy a second trade right here, okay, and then a third trade down here. My target is the high. So if trade number 1, which is right between this 23 and 30% pullback zone, if this goes to the high, I'm going to cancel this trade, and take my profit of about 350 pips, right? So if trade number 1 gets me to 350, I'll take profit. If trade number 2 is filled, then I'm looking at 350 on trade 1 plus around 650 on trade 2. And if trade 2 gets filled, it goes to the top, then I'll cancel trade 3. If all 3 of them get filled, then this would be about 900 pips. So 900 plus 650 plus 350, my stop loss is below this low. All I'm looking for price to do is get back into profit, right? So I'll get this one set up, but if you're looking for the entries, I essentially got in here around 111.85, which is roughly current market, okay? And then my pending order is lower, and you just adjust your trade size. I trade like this all the time in Forex trading. I trade small and I build positions and I make a ton of pips. So, if this makes 350 pips, cool. I'll make 350 bucks. If I get that combined with trade 2, I'm going to make about $1,000, right? I'm willing to ride this area out as long as price doesn't invalidate the 101.50 low. Okay. So that's my plan on the euro dollar. I like the trade. I think we can retest the high. If we get to 1500 or higher, I'm going to take some profit to protect. But if we still pull back, this is still the same thing as the dollar index. If we still pull back on the dollar index, meaning the dollar index goes higher, this euro dollar still pulls back. I think we're looking at areas to bottom out and then go higher. Okay. All right. Now I'm seeing a little run on SPX is breaking some fresh lows for the morning. I'm just watching this right here. I'm going to see if we can get down into like 58. Let's see if we get down. Fill this freaking gap. Let's go down to like 58.45 today. Let's see what happens. Let me see if I can set a chart while I'm here. 58.45. If we get some direction on the day, that'd be nice. I have a butterfly spread that's down to 5,800. I'm going to keep a close eye on that one just in case I can turn that into a winner. So this guy down about $20 right now, but there's some big upside potential in this one. I can turn hopefully a 35-cent debit into maybe, I don't know, 60, 80 cents a dollar, make a winner there if we get some direction. So let's go. Give me something. All right. Any questions on the euro dollar? So I'm in basically at market. The second level for me is a 108. It's a 108.80 entry. 108.80. And the other one is just below the 618. It's basically filling this pocket, and that is a 106.50. So I have a 1.0880. I'll just type it instead of trying to freehand that. So 1.0880 and a 1.0650. Okay. And then the trade I'm in here is basically market. I got in around 111.88. I did that trade yesterday live. So those are my three levels. My target is up here. 1.1500 to 1.1550 is going to be my profit target. So that window is my profit target. Stop loss is there. Okay, I'll take a screenshot of that. I'll post that in Pulver Alerts. I meant to post that yesterday after my afternoon session, but the trade's still valid. Okay, so I'll get that posted. All right, good stuff. We did gold, we did oil, we did silver, we did Bitcoin, we did some stocks, we did some indexes. Let's go currencies. Aussie CAD. Maybe I still get a pullback on this Aussie CAD, and I'm totally fine with this. This is a currency pair that it's one of my absolute favorites. You want to trade technicals, you want to trade pivots and structure and overbought, oversold conditions, efficiencies. Aussie CAD and New Zealand CAD are freaking awesome. So if this is a swing low, swing high, we get any type of pullback in here, I'm going to buy. I'm going to look for a symmetry swing. That's it. So if I get a pullback here, I'm still looking to add more, 8,800 to probably 8,650 area, add into a swing, bring my cost basis down, look for a three-wave move, and I'm still trying to get this thing back to like 94. Okay, don't worry, BC, you can just close your eyes. Aussie Swiss still looking to see if this thing will carve out. If we have a pullback here, I'm looking for a 3 to 5 wave move, or we come back to the 200 moving average, hit this resistance. We just keep grinding higher, grinding higher, grinding higher. I've said this too. If gold is going to continue to fall and pull back, I think that the Swiss pairs will improve. I'm already up some profit. I'm looking for a lot more, and I want to see this area get hit. So if we come up into that area, to me, this is a low to high swing. I'm looking for a pullback and then a push up into wave 3 symmetry. Aussie yen, no trade. The yen ripped today. Maybe it's just the backside of the trend line test, but that was not the trade. The trade was buy this thing during August or April's retest of those August 5th lows and ride this risk on. That was the best trade. CAD Swiss was probably that CAD yen was the best trade. This was the best trade. Technically, this was the best trade. This thing basically tested the low, and the dollar yen tested the low. The Aussie yen breached by a pretty decent amount. I mean, that's 90. We went down to 86. I mean, that's a 400 pip breach. That's not easy to trade. But CAD yen respected the low really nicely. Easy one to trade off those lows. Dollar yen tested the lows as well. Right here between the 141 to the 140 handle. And same thing, tested. Somebody asked me, would I be long dollar yen? I said, no. If you're long here, right? That's your trade. Don't be long at 148, you know? So I don't like the trade now. You missed it. You missed an 800 pip move off those lows. So don't chase the stupid thing, right? All right, dollar crosses. I'm still looking for a pullback on Aussie dollar. Hopefully we'll get one. Hopefully the Aussie dollar can settle in here. We can get a swing and then a push into open space. As long as we don't invalidate these lows, I think a swing trade looks pretty good on Aussie dollar. And then open space, this thing's great. If we get to like 64.50, 6,500, there's not much stopping this thing until we get to 68. So, I mean, again, it's all based on the dollar, but if we hold structure between about 63.50 and 6,300, then I like that as a swing trade. CAD Swiss, same as Aussie Swiss, just waiting to see how this one kind of plays out. Do we find some tops in here, pull back, and then have a symmetry swing above the 200 moving average, and then take some profit in this cluster? I'm good with that. CAD yen, Swiss yen, Euro Aussie, not really. I mean, these are just trades I'm not really liking. Euro CAD is still okay. It's not moving as quickly as I'd like, but I still think this thing's going to push down towards like 5,400. Be careful on it. I mean, it could be just a very annoying range. But if we find this level or lower, then be protecting your short positions if you're short Euro CAD. Euro Swiss, this one is looking better, kind of the same situation. Do we have what it takes to get all the way back up here to this high? If we do, I'm taking profit. Then we can pull back. I can structure this trade again and then get a swing up. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, no trade. Euro dollar, I just explained that one. Pound Aussie, I mean, if you're looking at a shorter time frame, this might be a low to be participating in and see if this thing rips back up to these highs. But it'd be tight stop and a run back up to like 2.10. Look at it and confirm it on a smaller time frame. Pound CAD, no trade. Pound Swiss, still long. If you got long anywhere in here, my target is going to be at 1250 to 1350. So if you're still riding this thing out, there's still some upside potential. We could get back to the highs, but also trailing stop loss in those levels. Pound yen, no trade. Pound New Zealand, no trade. Pound dollar, nothing yet. This one is sideways. Maybe a dollar retracement would maybe pull back this pound dollar a little bit, but I'd wait. I think euro dollar is a better setup, so honestly, I don't like the pound dollar. New Zealand CAD, same as Aussie CAD. We get a pull back into this area. This is awesome structure right here. If we get a pull back in, and this one, I wouldn't mind just doing this. Buy, buy, buy. Stop loss below. If this level holds and we get a symmetry swing, we're pushing back up towards these levels. That's a nice profit. Low risk trade, high reward trade, probably good probability. New Zealand Swiss, still watching this one for wave structure. We get to the highs, we pull back, we go to symmetry. That's at least my profit target. If we go to fifth wave symmetry, I'd have to be pretty patient for that one, but I have been patient on these Swiss pairs for a while. New Zealand yen, I'd say no trade. Not right now. I mean, you had your chance to buy the lows. New Zealand dollar, similar to Aussie dollar. If we go high, low, lower high, lower low, there's areas to buy in here as long as we don't break the lows. This is open space trading. And the hard part here is if you want to buy in this area, obviously it's a swing trade and that could work out really well. But if we just break the highs, we might still just make higher highs. Like this open space might be an easy trade and I hate this entry, but if it was just a buy stop and another buy stop and another buy stop, and this thing just goes higher to 63.70, maybe that's the trade. Let the dollar be all the noise, like be noisy, be messy. But if it just goes higher, buy stops do the job. So rather than trying to, guess what the dollar's trying to do. Dollar CAD, I don't like it at all. Dollar Swiss, I'm still long. Dollar yen, no trade. So that's kind of it. Top down, currencies, indexes, little futures action. Price is still contained. So we had like a little bit of a fake out move right there. We might just be sticky right around that 5,900 handle today. We have a major expiration on Friday with monthly expirations. It's crazy how much of the options expirations are all calls for this cycle. It's like 60% of the S&P are all call options, and all the puts that were put in are going to just be worthless. All the puts were, hedging into those April lows. So Anyway, we'll see what happens. But these levels, am I going to close this thing down? Yeah, I'm gonna close this down for a small loss. So 15 cents credit. I got in for 35. Yeah, let's see if I get 20 cents out of this. 15. Be generous. All right, I'll leave that there at, I guess I'll leave it at 35. Try to get a break even here if I can. See if we break this low. If we break that low on the day, then maybe that gets me back into break even or better. I'm just curious if we have a direction. I mean, this little melt up move from Tuesday would be nice to kind of see like a melt down move for today if we have any direction. Otherwise, I think by Thursday, Friday, like this is probably going to get filled. If there's any real direction, otherwise, after this week's expiration, coming into next week's trading, don't be surprised if we're down here. I think this market has, just efficiency standpoint, probably a little bit of a pullback coming. Okay. All right. I think that's going to do it for today. So all in all, we'll see what happens. I like buying dips. I just think the dips have to come. We need to fill this gap from Monday. If we do that, I think that'd be great. We pull back here. That's at least where I'd consider, okay, now I'm going to look at some 1-1-1s. Now I'm going to look at some ratio spreads. Now I'll start revisiting some trades. Honestly, my least favorite trade right now is going to see this, if this market just keeps going higher, 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 higher. I mean, look, I did synthetic longs here. I bought debit spreads. I sold a bunch of puts. I made a lot of money. Okay. But it's not enough. It could have been better. I could have been more aggressive, but I mean, nobody knew. I didn't know how volatile this thing was going to be. But here we are, like, okay, there is clearly resistance. I spent a lot of time just technically going through the charts. It's like, okay, so a symmetry swing, that could be resistance. A measured head and shoulders, that could be resistance. None of them, right? Like nothing has stopped yet. So this, especially this gap, like that gap kind of threw me off of like, okay, we're up 3% higher than like all these meaningful levels. We were above the 200 moving average. So even looking at the, I think I've got a blank workspace in here. This one. Okay, this is a 50-day and a 200-day, and we haven't spent any time in between. Like this market's like, nah, there's no indecision. Just go gap. I mean, that's what I'm talking about. This is where I thought, yeah, a little bit of indecision, and it just blew higher. So same thing on the SPY, and that's pretty unusual. Like that is a kind of a blow off rally. But all that tells me now is, okay, so we're in between here. Everything's kind of back above, but I think there's room to kind of pull back and have a gap fill. We could still be well supported. The bulls have a lot of room. The bulls have a lot of cushion now to still hold and maintain this recovery, which is kind of a good thing. But I think a dip would be, I mean, as somebody that wants to buy the market, a dip would be nice. A dip or pullback would be nice. Okay. And it's not just there. Like I'm not going to get crazy aggressive, but I will start, putting on some trades that protect me from a bigger pullback. So I can still, if I was to take any assignment, I would own it low. I'd own it at like April lows and work with it. So anyway, point is, if we get a pullback here, that would increase volatility a little bit. I'll sell some more premium and probably do like a 1-1-1 trade or a SPY ratio spread and see if I can pull in. I mean, if it's an income trade, it might just be a couple $100. But it's better than nothing, and I'll just keep kind of playing around with that over the next 30 to 60 days. All right. That being said, I'll let you go for today and come back and join us tomorrow. All right. Thanks, everybody. See you. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.